Hey there, are you also in a love-hate relationship with Zomato? Do you have your money invested in Zomato and are crying looking at the dip every single day? And just like everyone else out there, are you angry with how unstable the company is and all the random things that they're doing? Stop pulling out your hair, because maybe there's still hope to just hodl stock and watch it grow. Hello everyone, this is Rakshit from BYM Market and I'm here to explain why there's still hope for Zomato. Zomato, the leading food delivery business in India, is treading on a thin rope since the beginning of 2022. Before that, everything was sunny, people and the investor were looking forward to Zomato's growth. The picture was becoming stronger with each passing month since its debut in July 2021 on the stock exchange market. Zomato was like a rising star, grabbing the market capitalization of 1 lakh crore in November. It saw an all-time high of rupees 169 a piece of its stock price, but it seems like since the beginning of 2022, an eclipse has occurred for Zomato, which didn't seem to have an expiry date. Result, it has lost nearly 60% of its stock value. Shashank has lost a lot of money too. On 25 July 2020, Zomato recorded an all-time low of rupees 46 a piece in the Bombay Stock Exchange. It was during the end of the investor lock-in period that Zomato saw a 22% decline in its share prices. But unlike their offers, it was actually 22%, and it was a huge loss of value. The lock-in period means that shareholders cannot sell their holdings for trading for a certain amount of time, like a prisoner waiting to be released. After the lock-in period, Zomato's share value dropped so dramatically because shareholders, promoters and employees were now free to sell their shares if they wanted to. And that's exactly what they did. This is not the first time that Zomato is seeing a sharp dip in its stock value after the end of lock-in period. Back in August last year, the company faced a similar kind of situation where share price went down by 8%. But that's not all. If you look at Zomato's SC chart, its shares have been dropping down since the beginning of 2022. The company wiped out almost half of its investors' wealth in the first 4 months of the year. Seeing the value go down, the CEO of Zomato, Mr. Dipinder Goyal, penned a note in which he addressed to his employees and said, "This is the thing about stock markets and public company. Valuations can swing massively without any change in the fundamentals of the business, depending on the macroeconomic factors like inflation, interest rates, etc." Basically, what he said was that it's not their fault, but some external forces that are working against them. After so many losses, you'd think that they learned their lesson. But when the company announced that it's going to acquire the local grocery startup Blinkit for 4,447 crore in an all-stock deal, everyone just lost it, and the company's stock price tumbled in a lightning speed. People on social media also did not spare Zomato for its day-to-day worsening condition. They took a dig at the company by sharing memes and tweets on their social media handles. Take a look at this one. It's our personal favorite. But you know what? Zomato's decision to acquire Blinkit was not just a savior act, but an opportunity. The reason is actually threefold. The first is that Zomato, after many attempts, failed to enter the local grocery market. Second is a fierce competition from its biggest rival Swiggy from its rising success. And lastly, the slow pace at which India's food delivery sector is growing. For Zomato, acquiring Blinkit seemed to be the best shot at success, although it's another story that investors and people didn't feel the same way. Despite the declining stock prices, financial experts believe that Zomato's decision will have a positive impact on its overall performance in the near future. Still don't think so? You might feel relieved to know that Zomato is not the only company who's performed poorly at the stock exchange. During this time, almost all the recently listed tech stocks have had to face the similar fate. This includes big giants such as Paytm, Nykaa, PB Fintech and Cartrade. Zomato still has the potential to dominate the market share in the future. Zomato's growth depends on how actively its users are willing to spend their money. Considering this thing, it's going pretty smoothly as its average monthly transacting users are increasing steadily from 8.4 million in October 2021 to 15.3 million during the same quarter of this year. Also, considering the expansion of internet connectivity across the country, Zomato's user segment is likely to grow. The lifting of the lockdown restrictions has also favored the online food delivery business, due to which people are embracing the comfort of home while ordering food at their doorsteps. Moreover, the company is diversifying its segments. It's currently working on restructuring itself with acquisition of Blinkit, Hyperpure and Feed India. The company announced that it's soon going to change its name to Eternal to sort of have a new image, and will have 4 CEOs run each of its acquired units. It has also launched Intercity Legends, an intercity delivery service for your favorite meals from one city to another. So hey, you might want to hold on to those Zomato shares and hope for the best, because we're all in the same boat.